Stocks rally on Wall Street as producer price index inflation comes in lower than expected at 0.1%. The Nasdaq surges over 2%, while the S&P 500 and the Dow Jones gain over 1% each. Asian markets trade largely higher following a strong handover from Wall Street. The GIFT Nifty is also suggesting a higher start for the Indian markets. Crude prices fall over 2% as fears over global demand outweigh concerns from tensions between Israel and Iran. Hero MotoCorp's first quarter numbers failed to meet estimates as higher raw material cost hit EBITDA margins. Apollo Hospitals' numbers largely meet estimates as healthcare services drives growth. And the Calcutta High Court has transferred the investigation into the rape and murder of a trainee doctor to the CBI, says that the police's probe did not inspire confidence and questions the role of the state governments. The doctors and healthcare professionals end their two-day protests after meeting with Health Minister JP Nadda. Good morning. It is the day before India's Independence Day, and we are here to bring you another edition of Power Breakfast on CNBC TV 18 in the Mumbai News Center. I am Hormas Fatakia. Let's first take a look at how the Asian markets are faring this morning, and it's been a positive start across the Asia-Pacific screen. The Taiwanese index, which has been an outperformer all week, continues to do so, and it's up over 1.5% as we speak. The Hang Seng, though, is flat but is trading with a positive bias. The Japanese markets that have been the outperformers all through the week across the region, they are continuing to build on their gains. The Nikkei is up over 1% as of now. The Kospi also, the South Korean index, is also trading with gains of over 1%. The Australian index is also doing very well for itself. The Shanghai, though, is down just 0.25%, but that is the Shanghai is the only outlier in an otherwise positive screen across Asia. Pull up the GIFT Nifty as well, and that is also indicating a positive start for our own markets after the sell-off that we saw in yesterday's trading session. 64.5 points is what the implied open is suggesting on the upside. But the question always remains, today is the weekly expiry for both the Nifty and the Nifty Bank, so it'll be interesting to see if this gap up sustains. But moving to Wall Street now, and Tuesday's session over there was a positive one. The Dow Jones closed with gains of nearly 400 points. The S&P 500 also gained almost 1.7%, and the tech-heavy Nasdaq finished more than 4% higher, gaining nearly 2.5%. Now, in key macro data, the producer price index, which is a measure of wholesale prices, increased 0.1% last month. Now, this is less than the estimated 0.2%. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
Markets were positive today, with equities moving closer to last month's record levels following the first of two key U.S. inflation reports this week. The Producer Price Index, a measure of wholesale prices, increased 0.1% last month. That was less than expected. The Dow was up 409 points. The S&P 500 added 90 points, with the Nasdaq up more than 400 points. Google, meantime, announced its new Android software update and smartphone series that utilizes its Gemini AI assistant. The company announced a Pixel 9 series that has updated features as it tries to get its artificial intelligence products in front of more consumers. Now, Google doesn't make a lot of revenues anyway, from its hardware business, but the latest Android features could help drive new sales through the company's Gemini AI subscription program. And the United Auto Workers filed federal labor charges against Donald Trump and Elon Musk for their comments applauding the practice of firing employees who threaten to strike. It is illegal to fire workers who threaten to strike because the right to strike is protected under federal labor law. Trump made the comments during a 2-hour interview Monday night on X, the social media platform that Musk owns, which was formerly known as Twitter. That's what's happening here in the U.S. Back over to you in Mumbai.
Staying with Wall Street, let's also listen into some important voices as they react to the Producer Price Index data and the next move from the U.S. Federal Reserve.
Market rally on a softer PPI. If you actually look at that report, it was mixed, but we're moving in the right direction on inflation. But when you take a step back and think about it, you got an economy that's slowing. You're now pricing. I think we were at S&P was 5180 or so when we were on last week. We're bumping up against 5,500. We still have to see. I mean, I think you're going to see a decent CPI report tomorrow. But I would say the convexity of that number now, after you got a softer PPI and after you're pricing in so much for the Fed, Listen, if it weren't a good number, that wouldn't be a great thing in terms of the perspective of where the Fed is. So I am surprised we've moved as much as we have.
Inflation risk is much lower than the unemployment risk. So to the extent they make a mistake, I hope they don't. I'd rather they make a mistake by cutting too much than by cutting too little. If you look at what's happening to this economy, we have lost most of our buffers. We no longer have high pandemic savings. Credit cards have been maxed out for the lower income segments. The last thing you need is the labor market to come under pressure.
The Fed should bring forward those rate cuts, not because recession's the base case, but because the momentum is slowing, recession risk has gone up, and they should get closer to neutral as soon as possible. And Chair Powell had talked about this on July 31st before the jobs report, right, that they were seeing several signs of some slowing in demand for creating new positions and for a slight rise in unemployment claims. That's all, right? The mosaic was just showing the labor market was slowing.
And that's all we have on the global market action. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and of course, the FNO setup of the day. First up, Vamakshi is joining in to get us all the market cues that you need to watch out for. Vamakshi, good morning. How's the setup looking like?
Well, good morning, Hormaz. Yesterday it was not such a good session for Nifty, and Nifty opened on a weak note. But unlike Monday, the prices steadily declined throughout the session. In fact, the sell-off only intensified further during the afternoon, and resultantly, Nifty ended the session lower by almost 0.9%. In fact, it was a broad-based sell-off. We saw selling pressure in the mid-cap as well as the small-cap indices. Apart from that, all indices except IT ended with losses. Nifty Financial Services was the top sectoral loser, down around 2%, and this was dragged mainly by HDFC Bank as well as PFC. Nifty Metal too was under pressure, dragged by Hindustan Zinc as well as Welspun Corp. Nifty PSU Bank and Bank were also some of the counters, was also some of the indices that were under pressure. On the other hand, when we look at the US markets, they advanced after producer prices data showed abating inflation pressures. So that was how the markets performed yesterday. But looking forward to today, India's WPI as well as US CPI numbers will be key to watch today. Hero MotoCorp, Apollo Hospitals, Nykaa and some other stocks will be reacting to their numbers that came post-market hours yesterday. Today, we will be watching out for numbers of Glenmark Pharma, HAL, Masscow Dock, Ola Electric, and Hindustan Zinc will be another counter that we will be watching out for, because Vedanta is looking to sell 2.6% stake in the company via OFS. As of now, when we look at the trade setup, there's a positive handover coming in from the global markets, and the GIFT Nifty is indicating a positive start to the trading session today.
Positive start indeed. Vamakshi, thanks a lot for that. Over to Vivek now. List out the stocks you need to watch out for in today's session. Vivek, good morning. What's on your list?
Well, good morning. Whole host of stocks, a lot of results that came in just post-market hours yesterday. Largely, we'll focus on the results. First on the list is Hero MotoCorp, a disappointment all across the board. Now, earnings below estimates, higher raw material costs impacted the EBITDA as well as the margins, and realization, especially when you're comparing it to peers, only saw a minor increase of close to 2%. Now, when you're comparing it against our own CNBC TV18 poll, revenues high by 16%, close to 10,140. We were expecting a little over 10,560 crore. EBITDA, higher by 20%, but still below our poll. Margins too, below 40 basis points below our poll. On the back of that, PAT 2 missed 1,122 crores coming in versus our expectation of a little over 1,200 crore. On the other hand, Apollo Hospital, very much in line with what the street was anticipating, in line with what the CNBC poll was expecting. Revenues higher by 15%, in line. EBITDA too, at 675 crore, we had an estimate of close to 677 crore. Margins too, bang in line with our estimates, and profitability coming in at 315 crore, a slight beat versus our estimates. Next on the list is SJVN, a very good operational performance aided by higher plant availability factor. Revenues higher by 29%, coming in at the 870 crore mark. Profitability higher by 31%. So expect some green over there. NBCC, again, it actually gone ahead and outperformed infra peers. Strong execution seen over here. Revenue higher by 11.5%. Profitability higher by 38% this time around. The next stock on the radar, GMR Airports. Remember this particular stock, although there appears to be a loss as far as the bottom line is concerned. It's been a good operational performance by the company. The company also has taken an enabling provision to raise close to 5,000 crore via the QIB route. Revenues higher by 19%, operationally good, but on the back of the fact that the company had FCCB payments due and forex changes that happened, the company saw a loss of close to 337 crore on the bottom line. Two gold financiers also will be in focus, Muthoot as well as Manappuram Finance. Largely good set of results from both of them. Muthoot Finance, NI up 21.6%, profitability higher by 10.6%, aided by the fact that the company took higher provisions this time around. Manappuram Finance, on the other hand, NI up almost 19%, profitability up by 12%. Lastly, MTAR Tech, very weak set of numbers. Revenues down 16%, but the resultant PAT down almost 79%. Expect this particular stock to see a bit of a sell-off today.
As earnings season comes to an end, plenty of stocks to watch out for. Vivek, thanks a lot for that. And Mangalam lastly joins in with cues from the FNO space. Mangalam, Suprabhat, how's the setup looking like from the FNO side?
Well, what can I say? You know, it's a double dose today. The double dose is of the expiry of both the Nifty as well as the Nifty Bank. And yesterday, you know, we saw a sharp sell-off from the highs. Both the Nifty as well as the Nifty Bank saw big cuts. The Nifty was down almost 200 points from the highs of yesterday's trading session itself. And that's an interesting one because we also had the financial services expiry along with HDFC Bank's weakness. All of that pressurized the markets in the last hour of trade. So the intraday chart of the financial services expiry comes up for you. There you have it, ended at the low point of trade itself. What's interesting is that after 2 days of an up move, we're back in that, you know, selling at 24,350 sort of zone. So if you just take a look at, you know, the recent highs on the Nifty, we've sold off every time we've crossed past that 24,350 mark. Haven't convincingly crossed 24,500 for the longest time that I can remember. The two major reasons why we saw a bit of a sell-off, apart from the expiry and the HDFC Bank factor playing out, one was if you look at the cash market flows, the FI has bought about, the FI sold about 2,100 crores, the DI has bought about 1,240 crores. Typically, there's a dollar-to-dollar match, but yesterday there was a net outflow of close to 900 crores. Secondly, the FI sold even more in index futures, 2,400 crore worth selling out there. They've added 31,000 shorts, unwound about 5,000 longs. And if there was a headline of this morning, the headline is that the FIs have turned net short on index futures. So, you know, from the series start of close to 66% long exposure, it's come down to 48%, and 1.66 lakh net long contracts have now come down to 21,000 net short contracts. So in that, the up move of the GIFT Nifty will be extremely crucial to track whether we see sell-off at levels of 24,350 thereabouts or not. To add to that volatility, we have the Nifty and the Nifty Bank weekly options expiry playing out, and that's where the option writers are positioned for as well. You know, 24,300 call writers, very active, telling you there would be supply upwards of 24,350 thereabouts. At the lower level, though, there is strong support around 24,000 to 24,100. That's why 24,100 put writers are active too. For the Nifty Bank, the psychologically important mark, 50,000, will be important to cross because we have the maximum open interest at the 50,000 call itself, and a bunch of stocks on our radar too. After a big decline yesterday, Aarti Industries has entered FNO ban, as has Chambal Fertilizers, and we have Hind Copper, which is out of FNO ban after a big up move yesterday.
Mangalam, thanks a lot for that update. It's the Nifty and the Nifty Bank expiry as well. Time for a short break here on Power Breakfast. When we return, Starbucks CEO Lakshman Narasimhan has been replaced with Chipotle CEO Brian Niccol. We'll get you all the details on the other side. Stay tuned. We'll be right back. Welcome back. Starbucks CEO Lakshman Narasimhan has been replaced with Chipotle CEO Brian Niccol effective immediately. Now, Niccol will start in his new role from 9th of September. The company's chief financial officer, Rachel Ruggeri, will serve as the interim CEO until that time. The coffee giant's sales have been struggling in the recent quarters due to weak demand in its US and China markets, which are, of course, the core markets for the company. Shilpa Ranipeta joins us with the details. Now, Shilpa, tell us, why has Narasimhan been replaced and what does this mean for the company now?
Well, yes, it's just been a little over a year since Lakshman Narasimhan took over as the Starbucks CEO, but the company's performance has struggled under his tenure. Now, the company's shares have fallen about 23% under his tenure, from nearly $99 in March 2023 when he took over to about $77 now as on the close of 12th of August. Now, the company was also facing immense pressure from activist fund Elliott over the performance, and while accumulating significant stake, the fund was in talks with Starbucks for board expansion and governance improvement. But what's been the larger issue? slowing sales. Now, Starbucks reported 2 consecutive quarters of sales decline, and this is the first since the pandemic. And in the April to June quarter, same-store sales fell about 3% as transactions also declined about 5%. Narasimhan had attributed this to a challenging consumer environment weighing on sales at its cafes. And meanwhile, experts had been attributing this to, lack of a lot of competition and lack of innovation and also worsening store experience. Now, the company had put in place turnaround plans for stores that included experience and product upgrades and promotion, but that is yet to show results. In fact, the decline in sales also prompted Starbucks founder Howard Schultz to take note and say that the stores require a maniacal focus on customer experience through the eyes of a merchant. He said, and I quote, "The answer does not lie in data, but in the stores." He said this in a LinkedIn post in May.
Shilpa, thanks a lot for that. And the reaction on the Starbucks stock was there to see on Wall Street. The stock ended 25% higher in regular trading, which is the most that the stock has ever risen on record as a public company. And it added almost $21 billion to its market cap in a single day. That was the reaction on Starbucks. But as we slip into a break, here is a quick programming note. Now, global investor, author and columnist Ruchir Sharma in his latest book argues how a more restrained government in India has been generating faster growth. Now, he also talks about India's stock market performance versus the rest of the world, but highlights a critical flaw in his latest book, What Went Wrong with Capitalism. To know more, tune in to CNBC TV 18 for a freewheeling chat on global markets and the Indian economy later this evening at 6 p.m. Welcome back. Following an order from the Kolkata High Court, the CBI has taken over the investigation of the rape and murder of the 31-year-old trainee doctor at Kolkata's R.G. Kar Medical College and Hospital. The CBI has registered a fresh case and their forensics team will visit the crime scene in Kolkata today. The Federation of Resident Doctors Association has called off their nationwide strike following a meeting with the Union Health Minister J.P. Nadda. The association president said that the minister has assured a safe working environment for the doctors and that their demands would be addressed in a time-bound manner. Moving on to some updates on the crisis in Bangladesh now. Sheikh Hasina has broken her silence for the first time since her ouster as Bangladesh's Prime Minister. Now, in a statement released via her son, she's demanded punishment for those involved in the killings and acts of vandalism during the student protests against the government job quotas. She's also urged the people of Bangladesh to observe a national mourning day on the 15th of August in honor of her father and founder of Bangladesh, Sheikh Mujibur Rahman. The interim government, however, cancelled this national holiday. Meanwhile, a court in Bangladesh has opened a murder investigation into the ex-premier and top figures in her administration over the police killing of a man during the civil unrest last month. And that's all we have on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call takes the action forward.